window.
Hello, traders. Gary Wagner with the Gold Forecast here. It is Wednesday, the 6th day of April, approximately 9:30 in Honolulu, Hawaii, and this is the Daily Report. Gold is trading, yes, at a new record high. Currently trading 14.59. It has been as high as 14.61. Now, according to Bloomberg today, gold rose to a record for a second day in New York on demand for the precious metals as a hedge against inflation. Silver advanced to a 31-year high. Gold rose as high as 1463.70 an ounce on speculation that the U.S. will struggle to contain consumer prices. There is worry, obviously, of inflation in the air, as we talked about yesterday. We are looking at a daily chart. It is in candlestick format. Of course, the thing that we wanted to pay most attention to is the series of tops that we had and how we have finally overcome them. Of course, this is the first set of what we call our triple tops. This is that three Buddha top. Of course, we hit a record high as we came in. We then pretty much for the beginning of 2011 all the way through January came down in the marketplace itself and formed this strategic low right here at 1308. 1308, as you know from following my Elliott wave, was that beginning of a huge impulse wave and phase, And so what we had was we had 1 and 2, and of course we're looking at 3 as a complex wave. So we have 1, 2, and this, of course, is that third component. Traders, as I said yesterday, this market is up and off to the races. The one thing that you want to realize is strategically, when this market broke above not only this set of highs here, but of course these record tops here, once that happened, there is really nowhere out there that has any kind of resistance. My personal sentiment right now is that we have pretty much clear sailing up until about 1478, 1480, and that's that 23% extension that we talked about yesterday. And of course, this is the chart that we have been paying really most of our attention to lately. This is a daily chart with channel lines as well as Elliott wave, and I've also added a new twist to the equation, which is our Fibonacci extension. Now, obviously, the reason that I have to use an extension here is when we're dealing with record highs. As a technician, as a market technician, I have no historical references to go off of and say, last time it traded to 1480, this is what it did. That is, in essence, what a market technician does. We look in history, we look to see how the market reacted at certain points, and we ascertain that there's a possibility, a probability that this or that might happen because of this occurrence before. Most significant, you can see this just runaway market after we really leveled over this top here. You can see that this market has really just taken off. Now, it is currently trading near the highs, first of all. The second thing is that it's been trading up at the 1460. This is the bid. The ask is 1461 right now. We are absolutely a tick off of the historical record contract high that this market has ever hit. Now, what are we going to look for? Well, the main thing I think is that we are going to have to look to see how it reacts at these 2 points. Let me darken that for us, traders. And so I have gone ahead and darkened it. And what you can really see is my sentiment is that as this market trades, it's probably going to just trade at some point up one of these channels. It will pick one. Currently, it's on this channel. But as you can see, even if it hits the channel, there's going to be a certain point when these channels kind of match up in terms of the tops. So as I move this out in time, you can see that depending on the amplitude, meaning how quick it goes up, if this market just meanders up this level, at some point it's going to hit this point, and of course at some point it's going to hit this target here. And of course this target here, that's our 1500. My target has been 1506, and so we'll have to see if this market actually wants to go to this point. I will tell you this, traders, the market right now is dynamic, it is strong. We absolutely want to maintain our position. We'll talk about raising our stop, and we'll talk about some different ways that we can start to scale and add to the position. One way is we've left a little bit of capital on the side. We can take that remaining amount, divide that into 2 or 3 portions, and on any kind of a dip intraday, you can begin to scale in and add to the positions. That's what I think is prudent at this point. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update, maybe even a new record high. Bye-bye.
When I look out my window, many sights to see. And when I look